Learn how to turn your debts into profit opportunities and achieve financial independence with Robert Kiyosaki's strategies. Hello, welcome to our channel. Today we will talk about an intriguing topic: how to make money even if you are in debt. Discover how debts can become allies in the search for financial freedom. Let's go. Look, I know that debts can seem like a huge burden, but have you ever thought that they can turn into a profit opportunity? Yes, that's right. I'm going to tell you something I learned from the strategies of Robert Kiyosaki, the author of Rich Dad, Poor Dad. He teaches that not all debt is bad. There are actually two types of debt, good and bad. Knowing the difference between them is the first step to changing your life. Bad debts are those that only take money out of your pocket, such as high interest rates on credit cards. These interest rates grow quickly, drag you down, and before you know it, it has turned into a financial nightmare. Another example is student debt. They can become a problem if you don't have a concrete plan to pay them in the future. Now, here comes the interesting part: the good debts. They are the ones who work in your favor. Do you know how? They put money in your pocket. It's like you're using debt to make money. Let's suppose you decide to invest in something that gives you a financial return, such as real estate that generates rent, or a profitable business. The positive cash flow you receive from these investments can be used to pay off bad debts, and you will still have money left over. It looks incredible, right? But this is exactly what makes all the difference between those who get stuck in debt and those who use them as a springboard to financial independence. Understanding this difference is crucial for you to make smarter and more profitable financial decisions. Now, let's talk about a crucial part of this journey: how to use strategic debt to minimize the impact of taxes on your profits. This may sound complex, but it is actually one of the tactics that the rich use to grow and protect their wealth. The rich understand that debt is not just a burden, but a powerful tool that can be used to legally reduce the taxes paid. How does this work? It's simple. By taking out debts with controlled interest and directing them towards profitable investments, you can deduct this interest from your taxes, reducing your tax burden. This movement creates more cash available to reinvest and expand your business, which in turn strengthens your wealth in the long term. For example, when using financial leverage, which is basically investing using borrowed money, you increase your profit potential without necessarily increasing the amount of money you have in your own pocket. This means that, furthermore, there are specialized tax instruments that allow you to further optimize this strategy. All of this contributes to transforming debts into allies in the search for financial independence, creating a solid foundation for the future. The key is to use these resources strategically and intelligently, always focusing on maximizing your profits and minimizing losses. Now, let's delve deeper into the concept of financial leverage and the importance of using other people's money, OPM, to expand your investments. Financial leverage means using external resources, such as loans or partnerships, to increase your investment capacity and maximize financial returns. Understanding the dynamics behind using other people's money allows you to access additional capital without compromising your own wealth. This opens up the possibility of investing in larger-scale projects with greater profitable potential, something that might not be possible with just your own resources. The ability to make money work for you through OPM is a powerful strategy often used by the most financially successful individuals. By exploring and utilizing, this is the power of OPM in action. Discovering how to use these strategies effectively could be the difference you need to achieve financial independence. The key is learning to use financial leverage in an intelligent and responsible way, transforming debts into tools that work in your favor. Let's now understand why diversifying your investments is essential to mitigate the risks associated with debt. When we talk about turning debts into profits, one of the main strategies is to invest in a variety of financial assets. This includes stocks, bonds, real estate, and commodities. By spreading your resources across different types of assets, you reduce your exposure to market fluctuations, which can be crucial to maintaining financial stability. Diversifying is like building a safety net. If one investment doesn't do as well as expected, others can make up for that loss, helping to balance your portfolio. This increases the chances of obtaining consistent and expressive returns over time, even in volatile markets. Another important point is that diversification can also bring tax advantages. Different types of investments have varying tax regimes, and by having a diversified portfolio, you can exploit these differences to your advantage. This means that, with a well-planned diversification strategy, you not only minimize the risks involved, but also create a more robust foundation for your financial growth. When we talk about minimizing expenses and maximizing profits, reducing fees is one of the most impactful actions you can take. People often underestimate how much fees can eat into their earnings over time, but this negligence can result in significant losses. Therefore, it is essential to always be aware of the fees associated with your loans, investments, and banking operations. For example, when choosing a credit card, it is not enough to just consider benefits such as miles or cashback. It's crucial to compare interest rates and be aware of potential hidden charges that can turn a good offer into an unwanted additional cost. Choosing the right card wisely can save you a lot of money, which can be better used on your investments or paying off debt. Another important point is the analysis of management and performance fees when you invest in mutual funds or other financial products. Even a small difference in rates can have a big impact on your income over the years. Attention to these details can prevent you from paying more than you should, ensuring that by prioritizing fee reduction and cost optimization, you not only increase your profits, but also build a more solid and sustainable financial foundation for the future. Now, let's explore advanced strategies that can help you reduce your tax payments the legal and smart way. One of the techniques that the richest use is tax diversification, which involves strategically distributing their investments across different financial vehicles. This is done with the aim of minimizing taxes and maximizing returns. By diversifying, you can benefit from different tax regimes and reduce the tax burden on your income. Additionally, it is essential to understand the specific tax benefits associated with certain types of investments. There are exemptions, deductions, and incentives that can be taken advantage of to optimize your tax burden. For example, investing in certain funds or real estate can provide significant tax exemptions, while contributions to retirement plans can offer deductions that reduce the taxable value. Another effective approach is the use of appropriate corporate structures and succession planning. This means organizing your company or your investments in a way that protects your assets and ensures that your future generations can. Adopting a proactive stance in relation to your tax situation is essential. Seeking help from professionals specializing in tax planning can make all the difference, allowing you to keep more money in your pocket legally. With these strategies, you can enhance your investments, build a solid and secure financial foundation, and achieve your financial goals efficiently. The most successful do not ignore tax laws. They use them to their advantage. And you can also apply these same strategies to protect and increase your assets, ensuring a prosperous and stable financial future. Let's go behind the scenes of the financial strategies of renowned entrepreneurs who turned their debts into engines for building true fortunes. These real-life cases show how business visionaries strategically used financial leverage to expand their empires and create lasting legacies. These leaders adopted smart tactics early on, such as seeking external financing for their projects, allowing them to scale up their operations without completely compromising their own resources. Over time, they continued to grow through well-calculated investments and effective debt management, always transforming challenges into growth opportunities. These entrepreneurs faced several obstacles, but they knew how to take calculated risks, relying on a solid and innovative financial approach. They not only overcame adversity, but also reaped the rewards of their strategic decisions, consolidating their positions as true tycoons. Now, it's your turn to be inspired by these successful examples and think about how you can apply similar strategies to your own journey to prosperity. Learning from the successes and challenges of these entrepreneurs can be the difference you need to reach new financial heights and build a lasting legacy. Let's analyze the strategy of the rich in relation to the real estate market and how they use properties intelligently to expand their wealth. While most people see buying property as just a place to live, more experienced investors realize the potential of the real estate market to generate consistent passive income and promote wealth growth. The wealthy take a diversified approach to investing in real estate, purchasing commercial properties, residential properties, and land. So they aim to maximize long-term returns by understanding that different types of properties can offer different profit opportunities. Furthermore, these investors know that efficient management of their properties is essential. Whether through traditional rentals, platforms like Airbnb, or other forms of hosting, proper property management, they are skilled at negotiating advantageous deals that not only promise a constant source of income, but also guarantee the asset's appreciation over time. You can also use real estate as a powerful tool to build your wealth. By understanding these strategies and applying them, you can ensure a solid and secure financial. These secrets that allowed these leaders to achieve success are now at your fingertips. With dedication and application of the lessons learned, you will be able to follow in their footsteps and build a solid and prosperous financial future. In an ever-changing world, it is crucial to have a well-structured approach to financial planning, to face challenges and take advantage of opportunities that arise. Intelligent diversification of investments is essential. Respecting fiscal limits and observing global trends can be a key to achieving long-term financial stability. Successful entrepreneurs take a holistic view of their finances, balancing growth strategies with prudent resource management. You can also align your personal goals with current economic realities, identifying opportunities for expansion and asset protection. Understanding how to navigate the complex universe of finance with confidence and wisdom is essential to building a solid and secure financial future. If you liked what you learned and want more content about financial education, don't forget to subscribe to the channel, turn on notifications, and leave a like. This helps us continue to bring you valuable information. Thanks for watching and see you next time.